This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending July 10th, 2021. Our question this week is, how does the bond market affect the stock market? The answer will be provided later in the video. This week the market ended higher. The Dow Jones Industrial Average increased 1.3% on Friday and was up 0.24% for the week. The S&P 500 increased 1.13% on Friday and was up 0.4% for the week. The Nasdaq increased 0.98% on Friday and was up 0.43% for the week. Looking at the week, we can see that there were 7 up finishes versus 5 down finishes for the major indexes. On Monday, the market was closed. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Wednesday and Friday, the 3 major indexes finished up. On Thursday, they all finished down. The new unemployment claims were 373,000 versus 350,000 expected. The number of workers unemployed for at least a year increased by 248,000 to 2.9 million. Mortgage applications decreased 1.8% last week. The U.S. 10-year Treasury yield dropped to its lowest level since February. Pfizer stated that it is developing a COVID booster shot, and President Biden signed an order to crack down on big tech companies to boost competition. New unemployment claims, number of workers unemployed for at least a year, weekly mortgage application, U.S. Treasury yield changes, new COVID vaccine developments, and presidential announcements on big tech crackdowns are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Notice how the market reacted after it was announced that President Biden was cracking down on big tech companies. Now we are at our question of the week. How does the bond market affect the stock market? The bond market and the stock market compete for investment dollars. The bond market is much larger than the stock market. When money flows into the bond market, it leaves the stock market, and when money flows into the stock market, it leaves the bond market. Thus, savvy investors and traders watch the bond market to determine whether the stock market is going to go up or down. Do you invest in the bond market? Do you invest in the stock market? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it is not taught in school, so you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can get from the library for free. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out the list of recommended books on the books page on the Southside website, southsideschooloffinancialfreedom.com. These books and others will not teach you which direction the market is going to go, but you can learn how to make money in the stock market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending July 10th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was CrowdStrike Holdings, ticker symbol CRWD, in the first column. It increased 4.69% for the week, and it was up 0.4% on Friday. CrowdStrike is a provider of cloud-delivered solutions for the endpoint protection of computer systems. Their products provide antivirus capabilities to customers, delivering protection to defend customers against both malware and fileless attacks. Looking at a summary of results, you can see that CrowdStrike has increased almost 25% year to date. I did not trade CrowdStrike this week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 14.93% versus 16.49% up for SPY, a difference of 31.42%. The Southside is losing to SPY by almost 31.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin has taken a big hit in the last few weeks. The portfolio is 58.94% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 40.52% of the portfolio. Cash is 0.54%. The cash flow generated for this week was 0.85% of the portfolio account value. The account value changed by minus 3.06%. Meanwhile, the S&P 500 ETF SPY changed by 0.42%. I sold option contracts on 2 positions this week, 1 call and 1 put. That ranged from $350.03 to $533.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales. How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS.